Hey folks, Dan Frio here, the rate update. Today is January 11th, 2022. Huge day. Why? Federal Chairman Powell is going to speak in front of Congress to say what the Federal Reserve is planning to do to fix this debacle. So don't go away. That's what we're going to talk about next. So did you realize mortgage rates went up about 25 basis points or 1/4% since the New Year's? Diane Olick has that to talk about right now. And then when we come back, I'm going to wrap all this up so you understand what's going on today. It's a big day.
Well, this spike comes after we saw more than a dozen record lows last year, so this is a big change. In just the past month, we saw the rate shoot up about 40 basis points, but then the true spike was this week when the Federal Reserve made it clear it would start offloading mortgage-backed bonds from its balance sheet sooner than expected. We're up almost 25 basis points from New Year's Eve. That's according to Mortgage News Daily. Now, we could see 3.6% by Monday. So what does that mean for home buyers? Well, on the median price home with 20% down, the monthly payment is now about $100 more than it was a year ago. And for those putting less down, like FHA buyers, usually first timers, it's about $120 more. All of this is likely to cause more urgency among buyers now. Not usually a hot time in the housing market, but not much is usual in housing these days, Sarah.
Okay, so let's get to the nitty gritty of what's going on today. Okay, so let me get my big head out of the way and let's get talking about this. Mortgage rates jump again. Here's what it means to you in buying a home. That's what I just played from Diane Olick. You're going to see, you saw in her video that the average mortgage payment, if you didn't close and lock in, is now, or would be now, $100 more than it was just 2 weeks ago. Okay, so be cautious. All I'm doing is providing you guys with all the data. You make the decision that's right for you and your family. The next big news that we have today is Federal Chairman Powell is going to speak in front of Congress here at 10 a.m. I think Eastern time, so it's probably going to start here any minute. And what he's going to do is basically tell Congress or get quizzed in front of Congress on, what the plan is for the Fed. So they're blaming Federal Chairman Powell for all this stuff, but they did a lot of good. The Fed did a lot of good. I also blame the government. It's not just Federal Chairman Powell alone. The government was sending out stimulus checks and cutting this, and you didn't have to make mortgage payments, and you didn't have to make student loans and all that. I get it. A lot of people needed that. However, a lot of people didn't need that. Okay, so I just want to leave it at that. If you're out there and you're like, Dan, it allowed us to survive this thing, God bless you. But if you're the millions out there that are like, yeah, you're right. I really didn't need that extra money. It was just extra money that I was able to buy Bitcoin. I was able to buy more stocks. I was able to take some vacations I didn't do before. So you get it, I hope there. And I'm not bashing anybody for what happened. The economic calendar today, again, the only thing we really want to focus in on is right here. He's going to testify at 10 a.m. Eastern time, and I'm going to try to live cast that. Well, I probably can't now because it's probably starting right now, and I don't know if legally I can do that. So I'm going to be hesitant on that. I'll do some research on that end. So now let's get on to what's going on with mortgage rates. That's why you're here. Well, the biggest thing is you might see, and you probably, if I didn't note this out, you might see that all of a sudden the MBSs went from the 2.5 to the 3. And why did that happen? So let's dig into that. And then we'll come back and I'll talk to you and tell you what's going on with the Mbs market. But let's refresh this to see, we had a nice little reversal there. We were down 30, now we're down 19. All right, so here's how that happens, all right? I'm gonna try to put a link to this down in the description below. Basically what all this is saying, or what when you're talking about the coupon of the Mbs is going from 2.5 to 3, what that means is where is the rates closest to currently? Okay, so let me just caption right through here. This will make more sense of it for you. If you go down through this area right here, let me read this for you. Without digging too deeply into math underlying mortgage rates, one of the most useful things to remember is that note rates are based, or at least 25 basis points higher and not more than 101.125 higher than the MBS coupon. Okay, so remember that. Okay, to which they are ultimately assigned. In other words, 3.625 is the maximum rate that could be securitized in a 2.5 coupon, because 3.625 minus the 1.25 threshold puts you at 2.5. If that makes sense for you, awesome. If it doesn't make sense for you, don't lose any sleep over it. Basically, what we're trying to monitor here is what the trends are. Are rates going up? Are they coming down? Is there stability and so forth? So let's get into that area right now. Here is the MBS market and what's going on with that as we speak. So I'll refresh it again. We can see the direction it's going. This doesn't live cast for me. Okay, so the MBSs are down 19. So what does that mean? If you've been watching my channel for years, you know. But if you don't, let me just recap this real quick. The MBS, the 19 that we're showing on there, the negative 19 is what's happening to the price of a MBS. MBS stands for mortgage-backed security. It's basically the component, they're the biggest factor or the biggest ingredient to your mortgage rate, okay? So what happens when the price goes down, the rates go up. Let me recap this for any newbies out there. Let me explain how bonds work. So when the price goes down, yields go up. So let me make it as simple as I can. Let's say, for example, your coupon on that bond that you're investing in next year will pay you $100. Okay, so if you've watched my video before, you can scroll through this and scroll ahead to see where the next content is coming from. But I want to explain this to the newbies out there. Okay, so let's say again, next year when the coupon matures, you're going to get $100. All right, so we pay today $50. All right, and next year we receive $100 back for that bond. What is the yield on that bond? It's 100% because I'm giving you $50. I'm getting back $100. So I doubled my money. Okay, so that's the lower price. Let's rise the price up to $100. So now I pay you $100 and next year you give me $100 back. You're like, Dan, why would you do that? Well, there's a point here. The yield on that is 0. I gave you 100, I got 100 back. So there was no yield, there was no return. So you see, as the prices go up, yields go down. As the prices go down, yields go up. That's the best way I can explain that. And as you can see, it's been a debacle since basically all the way back in these charted territories through here. It's been all the way down. Now we've been down since, over here, but look at this. I mean, we peaked out right through in here and it's plummeted from there. Okay, so that's what's going on in the MES market. Remember, down is bad. It pushes up rates. Okay, so that's where we are there. The next thing is, where are rates right now? Well, rates, as you can see right here, they're going in the wrong direction, guys. They are going to go in the wrong direction because of everything that's happening. So let's go through the rates. And guys, these are not my rates. These are rates that are the national average. Mortgage News Daily does a great job compiling all this data. I use them and a whole bunch of other tools to be able to bring this to you guys on a daily basis. So let's go through rates right now. The national overall 30-year fixed rate averages 3.64. It is up 9 basis points, meaning it is up 0.09. Okay, so you can see here where now this yield or this rate is within that threshold that the MBS market has to push to the 3.0 coupon. You'll get it over time, I promise you. The 15-year fix is 2.87. It's up 10 basis points. Look at the FHA. FHA rates just in one day went up 0.15. That's crazy. Okay, jumbo up 3 basis points to 3.29, and the 5-year arm is 3.82, still above the 30-year fixed. How long that's going to stay there, I don't know. We might be eventually moving people into the 5-year arms because analytics and studies and history tells us the average loan duration that somebody keeps a mortgage is, guess what it is? 7 years. I never knew that until about 5, 6, 7 years ago. I thought people would get into mortgage and stay there forever, but they don't. So that's why ARMs are a very good option for you as rates continue to get higher and higher and higher. They have ARMs on 3 years, 5 years, 7 years, 10-year ARMs that are still have great rates. So that's what's going on with rates right now. So you're like, Dan, cool. Now what? Okay. So if you're in the process of getting pre-approved, building a house, refinancing a house, buying a house, anything in regards to a residential mortgage, please reach out to us. Okay, it's simple. You can give us a call, 844-775-5626. You can schedule a meeting. That's what a lot of people do, especially on the West Coast, because by the time they get home and settle in and have dinner and they want to call, it's too late here because I'm in Chicago. So schedule a meeting with us, and you pick the day and time that you're available, and we'll make sure we're there either on a phone call or a Zoom call. Or if you're like, hey, I just need to get this ball rolling, click the apply now button and you're on your way. As soon as you're done, okay, it's a great online system. All right, it's really simple. When you're done, based on the answers to your questions, it's going to tell you, what do we need from you? Okay, and then you can upload those into a secure site that we have. Probably within half hour, you're going to get a phone call from us. Basically, just asking you, what are you looking to do? And then we'll guide you and say, okay, based on that, here's the options that you have. Here's what we would suggest you do and why. You're the boss. You tell us how, what, where, and when you want to do this thing. Okay, we're not hard sales. We're just offering you guidance and your options. Okay, so that's what we do. So later today, there's probably a lot of programs, mortgage programs, you guys have never heard of. And those are what's called non-QM. I'm going to go over a bunch of those programs later this afternoon with you so you can get it, that there are options for those out there that are paid, maybe self-employed and you write off a lot of stuff. Maybe you're buying a residential house for the first time, so you don't, or a rental property for the first time, you just don't know what to do and how to qualify. And it's really tough sometimes to qualify having two properties. Can you use the future rent? Those are things we're going to go over. Can you use bank statements to qualify for a loan? Because you're like, I deposit a ton of money, but I write off everything. Depreciation is a cost that a lot of people have that isn't really a cost. It's a write-off on your taxes, so it's not truly a cost. So there's programs such as that, and we're going to go over those today in my secondary video coming out about 4 or 5 o'clock. So pay attention to that and look out for that. If you're a realtor or a mortgage advisor, I'd highly suggest you watch that because you might be able to find some value there for your clients. So again, please, all I ask you to do is go to therateupdate.com, check out all the things we have to offer to you, and we'd love to hear from you guys. Also, comment down below. What do you think? Ask me some questions or ask me some content that you want me to provide you information on, and I'd love to do so. Also, if you're a realtor out there, we'd love to do some collaborations with you. If you do YouTube lives, you do YouTube videos, that's what we're looking for. We're helping you to educate more of your clients, to put them into homes the best way possible. So thanks for watching, guys. I'll see you later this afternoon. Bye-bye.